Hello, fellow traders. Tis I, the Rumpled One, coming to you on Wednesday, August the 3rd, the year's 2022. Let's talk trading. Reasons to focus on money, part 3 with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, uh, let's see if we can pick up from part 1 when you left off. I did part 2 yesterday since you weren't
Okay.
around, but more reasons to focus on money.
For me, what the biggest thing, and I know I'm kind of repeating myself here a little bit, but, I think there's some more that we can talk about here, and that is that it's an emotional thing. Money is probably one of the most emotional things that are out there. Some people will go and say that money's even more emotional than relationships, and it can be. You think about it, the more marriages break up, the number one reason why marriages break up is because of money, disagreement over money in some aspect, some way or another. It's even greater than infidelity. And I know this from personal experience because of, not that I've ever been in that situation, but I've done a lot of counseling in my past life. And when people come into the counseling office, more times than not, people are coming in because of disagreements over money. People would come in and say, one of the people in the relationship would come in and say, hey, I'm making, some unseemly amount of money. I'm making $200,000 a year, yet somehow we're living hand to mouth and we're always in debt and da da da. And my spouse is going and spending every last cent of it. And the spouse is saying, all I'm doing is spending money on the things I need or the things we need, and it gets into this big, big hoopla. And so what does that got to do with trading? Well, it's something, it's very, very, most people, well, not most people, but a lot of people go and define their worth over how they go and how they're able to go and make a living and how much money that they make. That's what it really comes down to. It's sort of like that bumper sticker that was going around probably back in the 80s. The one who has the most toy, the one who dies with the most toys wins. I don't know
Yes.
if that's really true. I don't necessarily agree with that, but there are a lot of people who do think that way. And so money becomes something that's very, very emotionally attached. And so, okay, if you know that, then how do we take advantage of that? Because we can either do one or two things. We can either let it go and just and not let it affect us, which is very, very hard to do, or we can have it affect us in a very, very bad way. And some people would say, well, the third way is we can go and take advantage of it and have it affect us in a positive way. Well, letting it go, I think, and not having it affect you in trading, I think, is actually the positive way of looking at it. And the reason why I say that is because if you're not worried about the money, and letting it affect you emotionally, okay, now you're worried about the money because you want to go put the most amount of money in your bank account, but you're not worried about it emotionally. In other words, when you're in your trade, you're not letting it cloud your vision, cloud your thought process, cloud your judgment. You know what? You're going to make money. There's no question about it. You're going to make money. Sure, and that took me a long, long time for me to learn, and I'm still learning it. I'm nowhere near where I need to be on that. But what it has done for me, getting to the point where I'm at now, is that I've gone from that, semi-profitable trader to someone who's actually able to go and provide for my family. And and I'll admit it, that every time I take a trade, there's a little bug that comes up in my stomach, like, was that a good decision? And I have to take that little bug and push it away and say, hey, I'm in it. Let's manage the money now. Let's go and make sure that we're making proper decisions based on where we're at. And I think that's how you have to look at it. Now, Tiro, you had said one time a while ago, you had the thought of maybe writing an EA or some sort that just randomly puts a person into a trade, and then they have to go and figure out what to do where they're at right now, here and now. And that may be a very good training tool. You joked about it, but it very well might be, because, you're now in it. And especially if you did that little EA with real money on the table, it will force people to go and deal with that, part of their personality that most of us have to deal with.
Yeah, that's really true. Because, like you said, the emotional attachments that people have with money, the meaning that they give to money and to losing. Because, as I had told you before we got on the call or on the video, I said one of the things that I really discovered yesterday. It's something I've known I just hate to lose. I've hated to lose ever since I was a little kid. I mean, if I was losing, I was one of them kids that would just kick over the chessboard or the checkerboard or the Monopoly. I hated to lose. That's something that I had to mature out of, but that's still in me. I mean, if I'm in a trade and I could be trading $50 to $100 a pip, and I could be within, I could be like maybe down, you know, $10. And if anything, I should just scratch out of that trade, take the $10 loss, but I hate to do it. I mean, and it will because I guess and I know one of the reasons I hate to do it, beyond hating to lose, it's just getting out of the trade, then remembering all those times where if I would have just stayed in just a little bit longer, it would come back. But that's one of those things where I think it's selective memory, and I'm really starting to think that as far as trading goes, as far there's a difference between remembering and learning and remembering and having it be an emotional hindrance. And I think that's something we're going to have to explore in some videos.
Yeah. No, and I think you're onto something there, because there's the old expression, looking at the past through rose-colored glasses. Where we think everything was peachy in the past. I remember going and talking to my mother-in-law, who just recently passed away, and she was well up into her upper 90s, and she just passed away, and her remembering her childhood growing up in the Great Depression in the U.S., living literally in a cardboard box for about 5 years, on the grounds of what now is, JFK International Airport. But she grew up there, living on that grounds illegally as a squatter with her family in a cardboard box, and she just remembers that as being such a great thing, and she would just talk hours and hours about how wonderful it was living in that cardboard box. It's like, are you kidding me? I can't imagine that, having to go through that, and that, that's the whole point that I bring that up, is that whole topic that you just brought up of selective memory. And the thing is, we remember things sometimes just based on some type of bias that's within us. And so, I'm going to take this video to a slightly different turn on this and say, you know what? If you got biases based on certain things, or you've got beliefs on certain things, what you really need to do is just don't look at it based on your unobjective view of the past. Make it objective. And what I mean by that is start a trading journal and start writing things down. And not only put into that trading journal for every trade that you take, the trade that you took, why you took it, okay, why you got out, and then go, and if you were upset emotionally at the end of it, or positively, you were emotionally positively affected, write that down too. Categorize all that, throw it into a spreadsheet, and then look and see, is it really some truth to what you believe, or is it just some type of selective memory that's going on? And you may be very well surprised. Either A, because it's doing exactly what thought it was doing, or B, because it's not. It's something completely different.
Yeah, and you talked about looking at the past through rose-colored glasses, but then there's also just the opposite. You're looking at the past, and all you do is you remember everything that was bad. You don't remember anything that was good. You don't
Yeah.
remember, because I guess it's easier to, remember the fish that got away versus the fish that you caught.
I don't know. Maybe I'm more of I'm less pessimistic that way, I guess, because you're talking about fishing. I just remember the greatest things that I remember about fishing is some of the great catches that I got. Of course I remember there's lots and lots of losses that I took, but I don't remember any of them specifically. All I remember is that there were lots of losses, but the big ones, at least for me, I don't forget those.
Well, I'm think, but
you know,
see,
that,
and bringing it back to trading and in terms of money, though, I mean, how many bad, like bad beats do we have where you get in the trade, they slip you on the entry, so they put you in worse than what you wanted. They slip you on the exit, and then after you get out, it goes in your direction. I mean, it's just one of those things. Because it seems like it happens more often than not. But like you said, a trading journal might show that there's a fallacy there.
Right. And I think that the great thing about doing that also would be if you do find that, then the next step in that process is to figure out, okay, I know they're going to do this.
Mm-hmm.
Okay. Is there something I can take advantage of that? Is there a way for me to take advantage of that? I don't know what that is. That's for every one of us to figure out. But maybe there's a way for us to take advantage of it. For instance, if you know that you're going to get slipped, maybe
Right.
there's something that you can see on the chart that tells you, hey, wait a second or two or three before you go and press that button. Or not, I mean, those are the type of things that we, especially with the type of trading that, Kiro, you do and I do, whereas we're not looking to go and do swing trading where we're trying to make 100 pips on a trade. We're not looking to do that. We're looking to make 1, 2, 3, 4, 5, 10 pips, on a particular trade. And so, a slippage matters to us a whole lot more than a slippage matters to somebody who's swing trading. If you're swing trading and they slip you even 2 or 3 pips, you almost don't care. Yeah, it'd be nice to have gotten it, but it's not a big deal. But for the type of trading we're doing, yeah, it makes a deal. It makes a big deal. And
Right.
so what we need to do is figure out a way to to take advantage of that.
Yeah, it would be nice. It's kind of hard especially with MT4. We've got limited capacity here.
Yes, and I don't see that changing anytime, in the future.
Right.
MT4 doesn't have the capability, and I think it does work to the advantage of the brokers, so they probably don't want to change that very much. Now I do know that some of the newer platforms that are out there, they do allow us to go and have, true limit orders and such, which we'd have much better control over. But there aren't too. Yeah, I don't know of any brokers that have actually taken advantage to those new features that are in some of those new trading platforms.
I don't know. It's not that they're going to give us anything that'll put money or take money out of their pocket. That's for sure.
Absolutely, we're all in for business, right?
Right.
But in any case, I think that's in my mind, the biggest thing is that we need to do in terms of money management is just keep ourselves emotionally detached from it. Be objective. Just keep emotionally as best as you can. And we'll make better decisions doing so.
Yeah. Well, as usual, the fastest 15 minutes in trading is just about up. So, fellow traders, when it comes to money, you have to focus on it, but you have to make sure you have things in the proper perspective, and you're not going to go in the tilt because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.